So here's the key thing about Bitcoin. To me, it's a matter of time it gets to 100,000. The key fact is buy code supply is going down. Can't change it. Adoption and demand are increasing. Unless you expect that to reverse, which I don't, I think it's going to accelerate. Every sign I see is it's accelerating. It will continue to appreciate. It's just a matter of time. Right now, I think it's at that point where it's getting to very low prices. We should look back from the future as a very low price, like we looked back at the NASDAQ from the bottom in 2002.
Despite the recent price declines in the cryptocurrency markets, Mike McGlone, the senior commodities strategist at Bloomberg Intelligence, believes that Bitcoin is right on track for another all-time high by 2025. McGlone, who has over 3 decades of experience in futures and commodity trading, predicts that the world's largest cryptocurrency will hit the coveted $100,000 range by 2025. In his interview with Kitco's Michelle McCory, the veteran investor and crypto market participant also predicts that Ether will be much higher within the next 5 to 10 years. McGlone explains that certain events like the just concluded Ether merge have put some selling pressures on crypto assets in 2022. But nothing compares to the Federal Reserve's resolve to keep tightening in the gloomy global macro environment. According to the analyst and market strategists, the Fed's sledgehammer will continue hitting the markets until asset prices drop considerably. He predicts that the global equities could easily lose another $20 trillion before the dust settles. As McGlone explains in his interview, the next months are going to be hard ones on asset prices from crypto equities and commodities. However, for the cryptocurrency market, he believes it's all just some short-term pain for greater long-term gains. We will now take even Mike McGlone's interview. Please watch, like, and share the video. Also, ensure you drop your comments and observations in the comments section below and subscribe to the channel for more related videos. Thanks and enjoy the video.
I think the key thing to realize here, it's got a pretty good pump with all the publicity, and it's risking a significant reversion back towards $1,000. I think the big picture to think about with Ethereum is it's revolutionary. Just like I came from the futures pits and they revolutionized finance. It's revolutionizing finance like futures and ETFs. But right now, we get through this merge, and now we have to worry about potential bumps in the road, which we all know happens with this kind of technology. And remember, I'm a markets guy, the technology guy. I depend on other technology stuff. I depend on other people for it. But the thing is now, then we have to turn over to the macro big picture. What's been pressuring cryptos this year? And that is the Fed sledgehammer. And I think that's my focus. I mean, I've written about Ethereum and just kind of lighten up a little bit with all this merge talk, because I'm just afraid it got too hyped, and now now let's do it. And I'm worried about the short-term pain for a longer-term gain in all markets. Definitely a lot of the good news priced in for the short term, but it's within a significant macroeconomic, broad-based bear market for all risk assets. I mean, even housing markets turning over. Even bonds are down. It's that macro, and it actually might be one of the biggest bear markets in most of our lifetimes. And I'm almost 60 years old. And I think it's just early days, because I've never seen this before, Michelle. We have that much aggression from the Federal Reserve, and within a market, a global economy that's really tilting significantly towards recession. I mean, we have a Bloomberg economics tracker that's pretty seriously a good indicator in 2008. It's gone negative for a global economics tracker. So that's the macro. You dig into the cryptos, and I think what's happening is what's really happened this year is the markets realize that this Bitcoin thing is one of the world's most significant leading real-time 24/7 traded leading indicators. It's just indisputable now. I mean, it come Friday happy hour, that's when you really see it. And Saturday, you see what's going on. And Sunday, you see what's going on. And it's signaling risk off in one of the most significant risk off markets I've ever seen. I think we're going to see more of that, but I think it's going to come out ahead. Bitcoin particularly, because I think Bitcoin's going to be trade more like U.S. long bonds and gold, which had a problem today, which is indicative of the problem. And Ethereum's so revolutionary because one thing that's most notable, I like to point about Ethereum, it's making the most significant thing happen that I just find revolutionary, and that is the tokenization of assets. Most notably, the most widely traded crypto on the planet, our tokens, are dollars. Ethereum made that happen. Yes, there's competitors, but Ethereum was the leader. Tether's one of them. There's a dozen crypto dollar wannabes. People call them stablecoins, but people are realizing how revolutionary this technology is. And they all know, most people realize, okay, I've got to adopt or fall behind. Now, what does that mean for the price of Ether? okay, it might go back to 1,000, might even get a bit lower. And I think in the next 5, 10 years, it's going to go much higher. But right now, the key thing for all cryptos is they're about $1 trillion space. The global equity market's 100 trillion. It's already lost 20. It's probably going to lose another 20. And I don't see what stops that right now. That's the problem. Is this Fed sledgehammer is revolution. It's that unique, and in the midst of a global economy that's tilting towards recession. So to me, that's how macro is. But you look at this 5 or 10 years from now, and that's where I think cryptos are going to really make the difference. But I view it as like the year 2000 and the internet bubbles just starting to roll over.
In addition to 4 mostly consecutive and massive interest rate hikes, the Fed is also looking to unroll its $9 trillion balance sheet to bring inflation down to 2%. This is no mean feat considering that the central bank has spent over a decade bailing out the economy through quantitative easing. In his interview, McGlone explains that there will be no Fed pivot because the central bank now understands the gravity of its bailout missions on the economy. According to the strategist, the only thing that ends inflation is further massive asset price declines.
The Fed will not be easing anytime soon, and it's classic human nature because now we have the benefit of knowing how far and the mistakes they made by easing too much. So that's the key thing I like to see. Looking in the rearview mirror, it's very clear the pendulum for risk assets swung way too far to one side. And looking forward, into the front of where this car is going, it's very clear that pendulum's going to be swinging back significantly the other way. The Fed is a leading part of that, but it's just not going to happen that they're going to ease like they did during the 87 crash and during just when we plunged in 2018, and most significantly when we plunged in Q1 2020, because they know now they are somewhat responsible for this massive inflation. It's the key things I like to come back to, and cryptos are a leading indicator here. When it gets this macro, you have to go to the key rules of macroeconomics. Number one, inflation is always a monetary phenomenon from Milton Friedman. And number two, the Adam Smith rule of the invisible hand. And to me, that invisible hand is just kicking in massively, where you throw money at people, they buy too much, they extend, and now it's all going back the other way. So that's the key thing about cryptos. It was the most speculative leading indicator I've ever seen. It still is. I mean, on your phone, this stuff trades 24/7 globally, fluently, and it's really, it's revolutionizing how people can get access to other currencies than their melting currencies, like certainly the dollar and Bitcoin. But now it's going towards, okay, we've gone too far. 2000 we did, and then we dropped, and it took 13, 14 years to get back above that old high in equities. I see a similar case. This is 1929 and the Fed's tightening. It's very much happening that way. Look at things like crude oil. We just have the biggest pump in crude oil versus this 100-week moving average ever, crude oil futures. And now it's reverting. And what typically does is the pendulum swings back too far. And I think we're in the early days of that. So I don't think they're going to get too cheap, but I think what's the bigger thing is when the dust settles from this, because the Fed's not going to be easing anytime soon. That number one way to stop the Fed from easing is markets have to go down, unfortunately. Otherwise, they're just going to hang out and wait until that inflation goes down. And what's the best way to make inflation go down? Markets have to go down. Cryptos are just a small part of that. But that's why I think the macro is overwhelming. And I think it's, when I see a storm coming, I think it's somewhat my duty to warn people. And just telling this is my true feelings of what's happening. I ask people, and I'll ask you this, and even our listeners, what stops this? Is it going to be the Fed? Is it going to be a stronger dollar? Does the dollar has to reverse? No. Is it going to be global economy coming out of it? No. Is it going to be China coming out of it? It's very unlikely. I don't see what stops it at the moment other than risk assets going lower and reaching a lower plateau and us resetting.
McGlone also delivers a positive price prediction for Bitcoin, despite the nerve-wracking state of the markets. In previous interviews, the Bloomberg analyst had predicted that the largest cryptocurrency by market cap would be trading at $100,000 or more by 2025. In his most recent interview, he reiterates the same sentiments, explaining that Bitcoin's supply is fixed while its demand and adoption keep rising exponentially.
The positive that's coming out of this is phenomenal, Michelle. It means those days where people like me would say, oh, there's nothing to analyze because the Fed's easing, throwing money at the system, and that's all that matters. Those days are over. It's back to really good building solid businesses. No more zombie companies. If you go under, you go under. Bankruptcy can be good, and we get out of this. So that's the period I'm looking for. Once we get through this period of just a little bit of cleansing of the excesses of excess, we're going to be back to a world where, number one, the U.S. is completely dominant. Look at the U.S., world's largest energy producer, net exporter, world's largest agriculture net exporter. How did that happen? By adopting technology. 10 years ago, we were the largest net importer. So this is so much good coming out of this. It's just we have to get through the pain first. The Fed knows it. Most people are starting to figure it out. And I think that's why every time you see decent rallies in the stock market, you're going to see selling, and then we're going to reset. But remember, the future is going to be stock market's going to stay going down on bad news and go up on good news. And I've been so looking forward to that day. And this is the inflection point for the Fed to make it happen. They will not pivot to be too easy because they don't want to go back to those bad old days when everybody just looks at them to save them every time something goes slightly wrong.
What do you think about Mike McGlone's prediction for Bitcoin, Ether, and other assets? Please drop your thoughts and observations about the interview in the comments section below. Also, ensure you give this video a thumbs up and subscribe if you are yet to do so. Everything helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks for watching.